Hello everyone, it's John Solomon, the Money Doctor. Today I will be addressing financial services and financial plans generally, and the most common places or destinations and companies that people will go to put their money between different structures. I noticed between the time I was back into the medical field and right now being in the financial industry for so many years that there's a lot of misunderstanding or lack of knowledge, I would say, about what it is out there. So I'm just gonna make it really simple today. Basically, I see that most of you, we work really hard for our money. Okay, something that most of the people don't notice or don't see. Okay, that working really hard for your money will almost definitely fail you down the line if you don't have your money work for you at the same time. Working really hard doesn't really work, okay, because you have two odds against you. Things are getting expensive every single year. Unfortunately, we all know our income doesn't increase that much every year to keep up with the inflation. So now you have you're working almost with the same money and things are getting more expensive every year. So short term we see a gap. On the long run we see that our ability actually to work, okay, will go down. That means we cannot work as much in the future. This body will at some point fail us, meaning is will not to be it will not gonna be able to work as often. So that's why a lot of people out there, they fail to keep up with their basic needs. They fail to maintain the same lifestyle when they go to an older stage of life, not by intent, but mostly because they fail to plan and they fail to have their money work for them. When I say money work for them, it's really simple. Most of the people out there, they have their money in a financial institution or a financial plan or through a financial services firm. Okay, when I talk firm or financial services in the US or generally in the whole globe, there's three main structures. Three main, very simple. You have the banking structure or the lending structure. Banking system, very simple. You go out there, you put your money, give you the service to open checking accounts, saving accounts. Most of the bank, they have lending services so they can lend you money. Okay, so those are the banking system. You can open an account with them and you can actually, probably most of the time, they can lend you money or give you a credit card, debit cards for the convenience and for you to leverage some money that you have in there. So banking system, very simple. Checking account, saving account, liquidity, and all this good stuff. I'm gonna address all the pros and cons from every single institution or structure towards the end of the video. But generally, at the beginning, I'm just gonna go main thing: banking system, very solid. It's out there, good for opening accounts, for checking savings, or for lending. Okay. The second structure we always look at is the investment structure or the investment arena. Okay, the investment arena, you're talking about investment in my area, which I really know about, just talking the money side, it's investing in securities. When I talk about investing in securities, it's basically it's a financial instrument, negotiable, okay, that give you the right to own an asset, the right of debt, or the right for you to have the right to buy it, sell it, or trade it. Just the right to do it. Okay? So it's ownership, debt, or the right to buy or sell or trade. Okay? It can be many things. It can be stocks, it can be bonds, it can be mutual fund, ETFs, commodities, futures. You guys call it. It's out there. It can be government issued. It can be private sector issued. It can be anywhere. Okay, so this is the investment sector. Okay, the third one is life insurance companies. Okay, when we talk about life insurance companies, a lot of people actually don't really understand when I say life insurance. They say, oh, life insurance, somebody dies, might go with the family. It's beyond that, okay, way beyond, because life insurance company, they have either life insurance products or they have something called annuities, okay, and they're out there, and I'm gonna talk also about this and then. So now you have the banking system, you have the investment system, and you have the life insurance company system that you can go to for your money. Now I'm gonna go to pros and cons. Pros and cons for the banking system. We always know banks, the most good thing about them is the convenience, and they have many branches, so the ability for you actually to go to a local office in person, talk to a person or a banker in person, do the transaction. This is one of the biggest thing that in on the banking side industry, in the pros actually. And the second thing we always look at, most of the banks uh, are safe, something called FDIC insured, most of them. That means that your money is in there, is insured up to a limit which is 250,000 per bank as of today. Okay, so they have some safety. Okay, and to be admitted, it's a safe place to put your money as far as checking account and a saving account. Okay, it offers you also liquidity if you have it in the right vehicle. In the bank, it's also liquid. You can have a debit card, you can have access to your funds, so it's good usually for emergency funds. So it is convenient for local offices. It has the safety and to a some limit for the FDIC insured, and also you have the safety for the facilities and all the securities that the security system that they have to make that your money is safe as far as the facility. Okay, we also look at it from the con side. What's on the bank side? You don't need to be a genius to actually see it. Okay, history speaks really loud about that. You have the 1920, okay, crash. You have the 2008 crash. It's like the saving and lending loan crisis. It's banking system has a really high movement. They collect your information. They have a high leverage. They're really in the business of making money with your money. Okay, which is okay. Okay, but at the same time, we noticed in the Great Depression a lot of banks went out of business. So it is good for liquidity. It's good for safety. Okay, to a limit. Okay, it's also very concerning sometimes when it goes to lending and funding, so you have to be cautious who to work with. And the second thing is most of the banks, they don't give you high interest on your money when you put with them. For example, you give them open an account, a saving account, you don't get a lot of interest on your bank account as far as growth annually. I think maybe if you're lucky, you get like a point 1, 0.01, or sometimes 0.5. Or if you have a very high account, sometimes they can offer you 1% or 2% if you're really lucky. I haven't seen it often, but this actually doesn't go take you anywhere. So for long term, this just is not going to take you anywhere. As far as safety, good, but for money growth, I don't think it's the place to go. Okay, but unfortunately, most of the people go there. Okay, now we're gonna talk about the investment side. Okay, so when we go to the investment side, as I mentioned before, it's I'm gonna talk about some pros and cons. The pros, it's heavily regulated. Okay, so you have the FINRA and you have the Security Exchange Commission disclosure. You're gonna read between the lines. Everything is heavily regulated. Everything before it actually come to the public is very regulated. But at the same time, it's very regulated. But you have to either find a trusted advisor that you work with, okay, or do it on your own. But you have to actually read all the disclosures, the prospectus, and all this to find the suitability and if this is actually what you're expecting. So pros, it's heavily regulated for anybody to know what they expect, but you just need to read the disclosures. Second thing is, it actually can provide you growth. Okay, short term, long term growth is there with liquidity. If you choose the right tool, it will give you the liquidity, the diversification of your portfolio. If you go with the right advisor or right investment advisory firm, okay, and at the same time liquidity, most of the account have very good liquidity. You can access the money as soon as tomorrow if you need your money. Okay, so you have this. Okay, sometimes you have some consequences, but it's pretty much liquid. Okay, the cons on this side is the risk. Okay, there is zero guarantees. Okay, when you go to the investment arena, there is zero guarantees. So it can be suitable for some people with certain incomes or certain net worth, okay, for as far as leverage for their assets, but it's not for everyone, because again there's high risk sometimes. Sometimes some firms, they manage the risk, but at the end of the day it is zero guarantees. As far as what we do, we can try to manage that as much as we can, but it's zero guarantees. Okay, the third or the last thing I want to talk about, the investment side, uh, fees and commissions. They usually in the investment side and the trades, it can be really high. So this is something you can really hurt your portfolio growth. So you need to be aware of that. So that can be a con, can be a pro if it's in the right side, and if it's a very low fee portfolio and management, all that low fee fund, that can be good. But most of them, fees and commissions is not understand, is not be properly explained upfront. If it's not, and you don't know what you're paying, that can really hurt the growth of your portfolio. Last thing I want to talk about is the insurance side, which is the life insurance companies. Again, as really people don't really understand. Only the wealthy people actually understand the life insurance company pros and cons, and that's why actually usually there is an analogy we say, watch golf. I would say watching golf. Okay, most of the channels that actually have the golf series or championship, even the sponsorship, if you look at it, you're gonna see mostly commercials from life insurance companies. Um, this is their target people, because most of the people that watch golf is either retiree or wealthy individuals. They understand money. They understand the value of life insurance company. They understand how to protect their asset, and they understand how to grow their wealth with the least taxes out there. Okay, so the pros of being in the insurance companies, I would say they are heavily regulated on both federally and state-wise. So same as the banks are FDIC, you find the insurance companies are actually regulated with something like Guarantee Association per state. Okay, sometimes actually the limits for the guarantees in the state can be anywhere 100,000 to and 300,000. So collectively 400,000 per state, per person per account. Okay, so ask your insurance guy if the company that you're in is a guarantee association, one of the guarantee association members in the state that you're in. Okay, so it's heavily regulated as far as the federal of the company and the state for you in the state that you're in. So it's heavily regulated. Second thing, I think it's a very good point, and not a lot of people understand that insurance companies, life insurance companies, is very conservative in their investment moves as far as a company. Okay, unlike the banks, banks are fast moving. They do a lot of deals and stuff like that, and they have a lot of leverage. The banks, you can give them $1, they can loan out $30. Investment companies are completely the opposite. Investment companies actually go in very conservative tools, bonds, commercial real estate, long term. Okay, very conservative, and actually they're required to have reserves. Okay, so they're very conservative. So I think they're one of the safest places out there to put your money in. Actually, if we go back until the 1920s, life insurance companies or insurance companies generally has helped bailing out the government and the Wall Street firms from the crash. So most of the companies out there has been out there for hundreds of years, they survived the Great Depression and all the hardship they had throughout the years. So life insurance company can be a very, very, very safe place to put your money in. Is something else about the pros of the life insurance companies. Some of the strategies is there has a lot of tax advantages, so you need to understand it. Okay, we look now at the cons. Okay, nothing is perfect, of course. With a life insurance company there is some cons. For example, there is lack of liquidity. Okay, your liquidity usually is limited, especially in the early years in your contract. They have surrender charges if the person try to finish their contract early. There is a lot of products out there. This is the second con. There's a lot of products out there, and the positioning for the products sometimes is not the right proper positioning. There is a lot of products. You need to understand what you have and how is it positioned, and if it is serving your purpose and your goal and your time frame. So it's all about you being able to do either your research or connected with the right insurance agent to find a suitable product for you. Okay, so you're talking about now penalty or surrender charges. This is something you're gonna be giving up some of your liquidity. Second thing is that a lot of products out there, so you need to understand what you have. Okay, review it, know what to expect, what not to expect. Okay, third thing I would say, generally in the life insurance side, there is no bad companies, and I can say that with confidence. You can go out there, and most of the time, if the company is out there and has a good reputation, look at the rating. All the companies rating are public, you can see it. Okay, I personally, all the companies that I work with, and I work with quite few, okay, and all of them are actually A rated, top-notch companies out there. Some actually agents, insurance agent cannot have access to them unless they really been in the business and very good and know what they're doing. Okay, so meaning is there's no bad companies. It's just sometimes it's either a bad agent or an agent that's not fully trained. Okay, or an agent that's very tied to what he's offering his clients. Okay, so right now you have the banking, you have the investment side and the security side, and you have the life insurance side. It's not as clean cut. Sometimes you find these institutions cross paths and there is affiliations. For example, you can go to Bank of America, okay, and you have a way to invest with Merrill Lynch. You go to Chase Bank, JP Morgan investment, and stuff like that. Sometimes you go over there and the bank can offer you some life insurance companies with one of the companies that they have an affiliation with. Investment companies, the same thing. Investment companies, sometimes they have relationship with insurance companies and the opposite. Okay, so you can go to one of them and you have access to the others. This is when I come in, or we come in as advisors. We help connecting the client with all of those, either directly or indirectly, to make sure that the client actually get the best that he can get. They make sure that the client is actually connected with the right investment strategy or the right life insurance company, and at the same time we make sure that his banking side, between his account balances, credit card balances, or mortgages and stuff like that, is in good shape. So this is when we go in as a financial advisor to go in to see the plan, to see what the client have, to see what the family has, review everything. I actually give my clients an access to a link for them to upload what they have for me, so I can review before even me able to actually service or help them understand or give them advice. Okay, or maybe offer them a product or a plan that they actually need. So this is when you need a financial advisor or a coach to come in. Okay, you can go directly to any one of those, but frankly speaking, if you go to an investment company just like that, he's gonna try to get you something that they have on hand. You go to a bank, they're gonna try to have you something from what they have in hand. You go to a specific insurance company, they're gonna try to give you something from what they have. You go to an advisor or somebody that's a fiduciary, he's gonna look at what you have and connect you, represent you to a company or an investment company, or advise you on what to do with your bank, sometimes negotiate for you. okay, for what's best for you. Okay, I hope I made it simple. Okay, I hope I addressed all most of the pros and cons out there to make it simple for a lot of people that work really hard for their money. Generally speaking, there is no best place to put your money in. It all depends on you. It all depends on your situation. It all depends on your goals. So this is when we come in. John Solomon, the Money Doctor. I wish I brought value to you guys. I wish I brought some understanding, give you guys more clarity about where to go or what to expect, and you can hopefully make right decisions for yourself and your family and your loved ones. I wish you guys all have a beautiful rest of your day. I wish you guys all have a blessed rest of the year. Things are amazing out there, and it's gonna only get more amazing. Be thankful. God blessings to you all. Work hard, but don't forget to have your money work for you. John Solomon, the Money Doctor, and I'll talk to you guys soon. Bye bye.